Hi everyone, welcome. It is Wednesday the 13th of May 2026 and you're here with Cass Smith and Mary Jane Lidcote from Freedom Financial Solutions. This is our open free group Q&A where you can ask anything you want. Our area of expertise is generally around self-managed super funds, superannuation, tax, trusts, estate planning, asset protection and that sort of thing. But feel free to ask whatever you want and we will answer or not. Cass, this is the first time Cass and I have been back in Australia together. Cass has been travelling a little bit and I took a week off as well to do a little bit. And then Cass is going away next week. So if you've got questions to ask us, please feel free. How it works is you can either put your hand up virtually. There's an icon, raise your hand. You can just start speaking if no one else is speaking. You can put the questions in the chat. If you have a problem with your microphone, for example, don't want your voice recorded, that's fine. I'm just going to mute some people. When you, if you find yourself needing to speak, just unmute yourself, but please mute yourself again when you go off. And that keeps the recording clean. Cass, do you want to say a few words of welcome?
Yeah, I thought I'd have a little bit of a chat this time. Normally how we run these for future is just no presentation or anything. It's just a straight answer, ask your questions and we'll answer them. But today, I guess, being post-budget day, thought I might have a little bit of a chat. So I'm a bit of a dork. I have watched the federal budget for most years of my life. I wait with bated breath for the day and I sit and watch every word of it. And but to tell you the truth, last night I fell asleep because I watched a bit of it, but I fell asleep because the major changes were quite obvious and all the rest of the crap was just crap. So I fell asleep. But just wanted to say a few comments, I guess, on some of the major changes that we've seen. And I actually just posted a video on Facebook as well that I actually see this as one of the biggest attacks on Australian property investors and family businesses, small business, than I've seen in decades, if not my entire life of watching the budget. So they sort of delivered it as, you know, oh, here it is, as if it wasn't anything major. But I think it really is major. I think it will completely reshape the investment landscape in Australia. So just go over a couple of the things. The cost of living relief, I mean, what a load of crap. $250 offset, $250 a year they gave us. Wow, $5 a week. I went out to dinner for Mother's Day and kids took me somewhere that was quite a bit fancy and the steak was $250. I don't eat steak, but so that tax offset can buy you one steak at a fancy restaurant or 5 steaks at the local pub. Anyway, so let's get into some of the nasty changes. The negative gearing. So they're stopping negative gearing except for new properties. And whilst this won't have an immediate effect on everybody's portfolio because they've grandfathered old existing properties, but I think it will have a real structural effect going forward. And the reason is because new builds only. I've been in this industry a long time. I've been a property advisor and real estate agent and a salesperson for new builds. I did that for about 20 years and I've seen these things before. So they did things like cut the duty or give first homeowner buyer concessions just for new builds. They've done these sort of things before. And what it did was simply the builders go, yeah, great. And the builders put up their prices. So very quickly, any benefit that you get for investing in a new build is soaked up by the builders themselves. What it also does is it creates a two-tiered market. You've got your existing properties and then your new builds, and they're encouraging investment in the new builds. So their prices go up, demand goes up, the price of existing property may fall. And I'll come back to that. So then the next part is obviously, well, there's another part to the negative gearing changes that people won't have even thought of yet, and that is the borrowing capacity. So I was also a mortgage broker for 20 years and quite often when particularly a higher income person is going to buy investment properties, multiple investment properties, the way they can borrow more is because the banks factor in the negative gearing. So that gives them a tax benefit, and the banks put that on the calculator, and it can make quite a big difference. That'll be gone for existing properties. So even those people that do still want to invest in property, they may not be able to because of the banks lending, let alone the interest rates and the crazy rates we're going to be paying now. Next, we have the capital gains tax changes. So once again, it's grandfathered, so it's not going to affect existing properties that people have got, but it's definitely going to have an effect on property investors being less willing to invest in property because now the capital gains tax concessions are gone. Because one of the big things about investing in property was, yes, you'd make a loss every year, but you'd get a tax benefit. And then at the end of it, you sell it for a big gain and it's half exempt. That's gone now for new investments. So that those two combined, I think, may have quite a significant impact on the property market going forward. And I have been saying for quite a long time that I am predicting a property price fall. I believe this will definitely add to that property price fall. If less and less investors are wanting to invest, then the demand dries up. And the government actually admitted this. The government is saying that they're doing that basically on purpose to try and help the next generation to get into housing, which, okay, that may be a good thing. On the other hand, all the people that have invested, their lifetime building up wealth through property portfolios, I'm sorry, but you may see a big impact on the value of your property. So that's the hard bit. Then the next thing is the 30% tax on trusts. I must admit, I am a little bit surprised that they have done this. And once again, it was just sort of a bit of a one-liner in the budget, oh, we're going to do this, without much fanfare, as if it was nothing really. But Australian small businesses, 70% of them are run by small families, small businesses. 70% of businesses in Australia are small businesses. And a large majority of them, hundreds and thousands of them, are run through family trusts. I wrote my thesis paper on this subject 20 odd years ago, saying that they'll never change trusts. They'll never change the law on trusts because they've been around since the 16th century. Yeah, they haven't changed the law on trust. They've just changed the tax on trusts. A little bit of a tricky thing there. So taxing trusts at 30%, I did a bit of an analysis, and like just looking at say an average mum and dad business earning a $400,000 profit. Let's say 2 adult children are working in that business, so there's 4 of them. They split the profit between 4. Under the new rules, that family will pay an extra $30,000 in tax. That's no small amount. Hey, but they've got a $250 offset in return. Wow. Yeah, it's this the impacts of this budget is actually huge. And sorry, but there's no solutions. I don't have any answers to it, other than we just have to wait and see the fine detail, because it's all just proposals at the moment. We have to see the legislation. We'll have to see what they really are planning. No doubt there'll be lobby groups and there'll be a whole lot of process trying to get this through legislation. All we can hope is that maybe some of it won't get through. And then when it does get through, then I guess, that's what I've done my whole life. It's something I enjoy doing, is looking at the laws and seeing if there's any ways around it. So at the moment, I don't know, but, we will be keeping our eye on it and announcing anything we can see that can help. Literally, I'm getting to the point where the only answer left for Australians is to go off, set your business up offshore. For those that are running enough of a business, their profit is enough to make it worth going offshore, because we're certainly not getting anywhere in Australia. Anyway,
there is something. There is, like, we can, at least it's not legislated yet. So if you want to start writing letters and agitating your local federal representatives that, cause them some grief, now's certainly the time to take some action.
Definitely.
There are lots of related questions in the chat, Cass. Do you want to keep talking, or do you want to sort of use these questions?
My rant, I'll have a look at the questions. All right, Jenny J has asked, please clarify if the 30% tax will occur on most investment profits. Yeah, I believe that that's what they're planning to do, because otherwise it wouldn't work. So I was thinking about that myself. You know, what if a trust distributes to a low income earner? No, it seems that they're going to tax it all at 30%. That's what the initial announcement seems to do, which just rips the whole tax benefit of trust apart, because, well, even companies are taxed at 25%. You know, individuals are taxed at either nil if they're under the threshold, or 20%, or, you know, hang on, I'll have to have a look while I'm just talking, but what tax threshold you go up to 30% as an individual, I believe it's, you know, not till you're well over $100,000. So yeah, to tax trusts at a flat 30% is a huge.
There is still asset protection value, though, in having your assets held in a trust versus personally, because I think people may be thinking, oh, well, why have I done everything in a trust? It's still, there's the equity law, which, as you said, it's not changing the law about trusts and their value in asset protection. They're changing the tax regime, or they're trying to.
Yeah, I'll definitely come to that in a moment on the family protection trust that we've been working on for people. So I'm just looking at the tax rates, and yeah, you get taxed at 30% as an individual when you're over 135,000 in income. So yeah, taxing trusts at 30% flat is a huge detriment to trusts. So yeah, pretty scary stuff. Yeah, so back to the Family Protection Trust that some of you here may have already set up through us more recently. They are specifically for preparing against the inheritance tax and the death tax, which I still believe is coming. The only reason I don't think they put it in this budget is that they've already put enough in this budget. You know, they probably don't want to completely scare everyone, but yeah, I still believe the death tax is coming. Every other country's got it. It's only a matter of time before Australia gets it. So the Family Protection Trust that we've set up, that we've been helping people basically move their assets into, so that when the inheritance tax comes, they're not going to be subject to a 30 or 40% tax. They are still absolutely worthwhile, because this 30% tax is only on the income. It's not on the asset itself. So if you're moving your home into one of these family protection trusts, there's no income on it anyway. So this 30% tax isn't going to affect the family protection trust. Whereas the 30 to 40% death tax, when it eventually comes in, will apply to the whole asset. So there's no change to everything that we've done in regards to the family protection trust, other than we're not in such a rush anymore. We were trying to get everybody's done before the 12th, which we managed to do. By hook or by crook, we managed to get everybody that's come to us in the last few months, we got them done by yesterday. So yeah, anyway, the pressure's off that, so we can still do it for clients if you want to get involved in that for the future. The time pressure is off. I guess it'll be the next budget that they might bring that in. All right, I'm just going to keep having a look at the.
And while you're looking at the next question, if people don't know about the Family Wealth Protection Trust, I'm going to put a link into our YouTube channel where there's an introductory video where Cass talks about that. That's the sort of place to start. Have a look at that. And then if you're interested, you can email us to find out some more information.
Yeah. M and K have asked, interested if you've owned your own home for 10 years and in 3 months rent it out as an investment. Yeah, we don't know that yet. We don't know that. The way it's been announced, it seems that it's more that you would still be okay for that because you own that property before these rules came in. That's the way they've announced it. So you would still get the negative gearing M and K. once again, the devil will be in the detail when we actually start seeing some of the legislation coming through. Does the 30% tax on trusts also apply to testamentary trusts associated to wills, death tax in disguise? I just mentioned that a moment ago. I don't think so, because the 30% is just on. Sorry, Mary Jane, if you can mute. The 30% tax is on income. And they have mentioned that deceased estates will be exempt. But I'll be surprised when I see that detail. Because at the moment, deceased estates, testamentary trusts, the tax benefits go forever, which is I've always, ever since I was 18, I've been fascinated and in love with testamentary trusts, because that is one of the best tax benefits you can have is a testamentary trust. I'm waiting for the day they start attacking those, and they have already started playing around with the edges. But yeah, the 30% tax won't be a death tax in disguise, because they're not saying they're going to tax 30% of the whole asset. They're just going to tax 30% on the income of the asset. So the worst thing could be is that if in that testamentary trust that property is rented out and makes a profit, there might be 30% tax on the profit. Ingrid has asked, it's an absolute clear path to decimating Aussies one bill at a time. Totally agree with you, Ingrid. That's what I was saying in my earlier rant and on my Facebook post. Yeah, in fact, if you watch the Facebook post, there is a little bit where I might have said a little bit too much in terms of swear words, but I couldn't help myself. And yeah, they're really screwing us really rightly, truly. And yeah, Ingrid is saying that, do you know that before last night, we, the working class, had to work 106 days before we start making money? Yeah, day just passed last Saturday, charged 47% tax. Absolutely, and lots of hidden. It's not just 47% tax, because then we have GST on everything we spend. We have import duty on everything we import. We have the petrol taxes, cigarette taxes, alcohol taxes, you name it. I think someone said analysis we're about an effective tax rate of about 75%. Highest tax country as far as I am aware. We are cooked. And I did say, yeah, people are leaving it. It's starting to become the only option is to actually leave the country, which is really, really sad. I love Australia. And anyway, Ingrid has also said we sold our last investment property last night. Last night. Good on you, last night. Lost on at least 3 properties. Yeah, lose. Yeah, so as I said earlier, was a real estate agent, well, I still am, and a property advisor for 20 years. My main passion was selling investment properties, but I quit that in about 2022. And I just said to my team, I said, sorry, I'm not doing it anymore. I just can't put my hand on my heart and recommend investment properties anymore, because I think we're in for a rough ride. I think property market's going to drop, and now that we've seen this, it's like huge. Yeah, there's a lot in it. Pam has asked, does the CGT discount only apply to housing or all assets? I believe the way they've worded it's going to be all assets. Gold, silver, crypto, shares, you name it, all of it. What else? Does the capital gain in the trust get taxed differently, or is it only income at 30%? We'll have to wait for the detail on that. I don't know. At the moment, the way the capital gains works in trust is it does get separated. It's under the capital gains rules, not under the income tax rules. So if they keep it that way, yeah, it won't get the 30% tax, but we'll have to wait and see. Helena's asked, if we left, where would we go? Well, I've been looking at Bali. Other people have been looking at Vanuatu. Other people have been looking at Singapore, Costa Rica, Dubai, although that's probably not what you want to do at the moment. But yeah, just countries that have a better tax system. Personal bank account attract the 30%. not a personal bank account, but the trust tax account. If you have, investment in the trust, in a trust that's got a bank account, 30%. In my opinion, Kristen has asked, from a macro perspective, what do you think the end goal is for Australia here? Look, I've said for a very, very long time that, I know a lot of the people watching this are fellow like-minded people like myself. I did put on Facebook, so there might be a few secret spies on here, I don't know. But from a macro perspective, I think Australia is screwed. I think the end goal here is just to absolutely screw us. You will own nothing and be happy. The property market, if what I believe is going to happen and the property market falls, even if it only falls, let's say 15 to 20%, all of a sudden then you've got an issue of the banks who have lent up to 90% on a higher value. The banks are now going to be looking and going, hang on a sec, we like our loan to value ratios to be below 80% or 90%. The property value's dropped. Hey, Mr. So-and-so property owner, we want to rewrite your loan. We want you to kick in another 10% or 20% or force you to sell or and also not lend as much on the new properties, and all sorts of things can happen that could be forcing people to sell their properties. And then you got to add there the interest rate rises. They're not going to change. I stopped watching all the budget analysis. That, quite frankly, I was very, very tired, but it was also just making me feel sick because they were basing some of their predictions about, look how wonderful it's going to be. The budget isn't as in bad shape as it really is. We're only 1.3 trillion in debt instead of the predicted 1.5 or something. And where they've predicted petrol, oil at $100 a barrel, and admitted if it goes up to $200 a barrel, we're screwed. And all their predictions are like really at the best case scenario to try and make it look good for us. It doesn't look good. Then we add the interest rate rises, as I was just saying, and then the cost of insurances with all the natural disasters, the rates and land taxes, everything that's been heaped onto property is really scary. Their ultimate aim, if anyone knows Agenda 30, if you don't, go look it up because it's there, it's true, it's not a conspiracy, it's on the government websites, Agenda 2030. You will own nothing and be happy. That was their initial marketing. I've got the initial ads, they've taken them down now, but the initial ads for Agenda 2030 was you will own nothing and be happy. That is still their agenda. And I believe this is all just part of that agenda. So the end goal for Australia here is not looking good, I don't believe. Unless, of course, everybody stands up and enough people collectively come together and do something about this, but I don't see that happening. All right, Carol has asked, on assets outside super, do we have to pay minimum 30%? No. No, if the 30% is just for the trusts. So in your own name, that's still fine. You'll have your normal tax levels, except obviously the capital gains will be different. So on the metals, but they're grandfathering existing assets. So if you already own those metals, the old rules will apply. So that's all still okay. It's on new investments. So Mary Jane, if you don't know about Anika Wells, Australian Labor Party politician, serving for the Minister of Sport and Minister of Communications. And under scrutiny for high taxpayer fueled funded expenses. I've seen that.
Yeah, that's because M&K said Anika Wells doesn't worry about restaurant prices when you were talking about the steak.
Yes. Helene says we're going to Dubai. Start researching. Yeah, so I have set up offshore in Dubai. I was just about to finalise everything when the war broke out, so I haven't been able to go there to finish it, which is the last thing I needed to do. But I have set up in Dubai, and I do have an associate tax accountant that specialises in offshore entities. So, watch this space because I think it is the only thing left. And I will be talking with her more and more about, what Australians can do about offshore. But It is expensive to set up offshore, and it really is for business clients, you know, with a substantial business, and particularly a business that can be run offshore, like online businesses, they can be. For a bricks and mortar, like a business that has a shop front here in Australia, builders that are building here, people who are providing services here in Australia, it's still going to be very hard to go offshore. Marianne has asked, general question, not budget related. Your SMSF is in pension mode. Can you still contribute to the fund into existing bank account? I'll just start at those ones. Yeah, absolutely. Once SMSF is in pension mode, that is behind the scenes, the accountants just convert your existing account into a pension account. If you then contribute, they set up another account called an accumulation account. You can just keep contributing, but it's still into the same bank account. It's just something back in the background that the accountants do to make that happen. Income tax benefit, yeah, absolutely. So anyone who contributes into super, you can claim it as a tax deduction up to $30,000 every year as a concessional contribution. That's all still untouched. So yes, is there any point still contributing? Absolutely. I actually said to my last client who just booked in just to see, you know, what can they do to save tax? I used to always say there's only 3 things you can do to reduce tax now. After all the years and years, 30 years of me watching the tax system, the only 3 left were negative gearing, which is now gone, trusts, which is now gone. The only one left is superannuation. And even then, they've limited it to $30,000 a year per person, but that's all you can do. So you may as well at least do that. And Mary Ann's continued questions, is the income your fund produces still tax-free? Absolutely. If you're over 60 and retired, or over 65 and not retired, the income is still tax-free. So even the capital gain tax-free. So once again, superannuation, particularly SMSF, our favourite, is basically the only thing that's left for us. So if you haven't already got an SMSF, you know, have a look into it. So Marianne, no, you don't close your fund, you just keep using it. It's the only thing you've got left. Helene, thanks Marianne. Helene, so CGT on all income, including bullion, how does that affect SMSF bullion? We need to see the detail on the SMSF capital gains tax, but I think it will be the same. So once same as what they've announced for everything. So what that means is your existing bullion will be under the old rules. The new bullion, if you buy more from now on, it will be under the new rules. So there will be less of a capital gains tax benefit in the SMSF. Best thing to do is to try and hold on. It's still a better tax than in your own name, but I always tell clients, if at all possible, you hold on to your investments till you're 60 and retired, or 65 and not retired. Then under the current rules, it's all still tax-free. So that's what we'd be looking at doing wherever possible. And it is criminal, Helene. It's absolutely criminal. Yeah, with the house value dropping and the banks wanting to rewrite the mortgage, can't say exactly that that's what will happen, because my understanding is they don't have the ability to come in and rewrite a mortgage once you've got one. But I tell you what, if you default on your mortgage or anything like that, that gives them an excuse to come down on you, I believe they will. So be very careful. Ha, Mary, will they ever backflip or reverse these taxes? What? In Australia? Gotta be kidding. You know, once they bring these in, we don't see them ever coming back. So it was a big step for them to attack trusts like this. It's the first time I've seen it, and they won't be taking it back. M&K have posted a YouTube video, which I'll watch a bit later. Grandfathering. Pam has asked, how will the grandfathering work for all assets? So what grandfathering means is that any assets held before yesterday stay under the old rules, and then any new assets will come under the new rules. So everything you've got now will remain unaffected, which is really interesting because the government is saying, you know, this is going to make them so much money in their budget, but it's not really going to make that much money in the beginning because all the assets are grandfathered. Like, it's not going to apply. It's only going to apply to new assets when they're sold. So the budget, the money they're going to make could be years and years and years before the government see any of that. Pam has asked, can offshoring be used for assets like bullion? Well, I'll be careful with what I say here. Yes, sort of. So I have to bear in mind I am a licensed tax agent, so I do need to be very careful about things that I say. If you're an Australian resident, you are still meant to declare all gains on all assets worldwide. So the technical answer to your question is offshoring won't help. The more pragmatic answer to your question is they don't know a lot about things that you have overseas. And that's all I'm going to say. Does the old scheme apply up to the 1st of July? Actually, yeah, I think I just need to double check that. I'm not sure whether it's scheduled as of the date of the announcement. Mary Jane, did you happen to see that detail? Is it going to start on?
There were some things that were starting from the 1st of July 2027, which was the WOTSO thing, the Working Australian Tax Offset thing, or the what an insultingly tiny offer. But I'm not sure about this is about the investment, the negative gearing. Yeah.
Yeah, I've got it here. So yeah, of course, the $250 they're giving us doesn't start until 2028.
Yay! I wonder how many cups of coffee you can buy for $250 in 2028. 3 or 4?
We're going to be waiting a long time for our steak. The negative gearing changes start from 1st of July 2027.
Oh, so you've got a year.
But I'm going to see the detail on that because that's really weird, because then people might rush out and buy negatively gearing properties between now and July 27. I'd be very careful doing that because until we see the actual detail. Same thing, the capital gains is from 1st of July 2027. Once we see the detail on that, that might be interesting because, say, for example, if it only applies to assets after July 27, it might be, you know, people that haven't bought bullion and stuff, you might want to buy it before then. But just wait till we see the detail. The 30% trust tax changes from 1st of July 2028. Yeah, so there's no immediate overnight change. It's more of a long-term structural shift. What does start immediately is the market psychology, investor uncertainty, banks reassessing their lending policies, developers and buyers reacting to the announcements. It can affect property sentiment, investor confidence, and buying decisions, which is exactly what I'm saying. I will be thinking that it's going to affect the property market. People are going to be less likely to want to get into some property investing going forward. Interestingly, prior to budget, they were talking about the negatively gearing changes. I think they were just warming us up because they were saying that it was only going to affect people with 2 or more negatively geared properties. And when I read about that, I did a bit of analysis on that, and I thought, well, that's actually not too bad because about 90% of property investors only own 1 or 2. There's only actually a very, very small amount of Australians, the wealthy Australians, that own 3 or more, and only a very small handful own a large property portfolio. So I thought that change of limiting it to 2 investment properties, I thought, oh, well, that's not too bad. You know, your average mum and dad could still do this. But no, the changes they brought in were much, much broader and bigger than that. So that's all right. What else have we got on here? Jane's emailed our team, still waiting for a reply.
Yeah, I answered that just below. So just for everybody's if you want to invest in anything from your SMSF, whether it's bullion or shares, Tesla shares, I think from the US, so Australian shares, international shares, all you need to do is, first of all, select a broker, whether it's a bullion broker, a share broker, or a Bitcoin broker, and you contact that broker. We can't, apart from Ainsley Bullion, who we simply refer people to because we know that they look after our clients really well, and Ainsley Crypto, we don't have any referral partners regarding shares. So if you want to know who to use, just sort of ask Mr. Chat. And there are big ones, big known ones, ANZ, ComSec and so on, or there are little ones. But online you can do a search and do comparison of how much they charge you. So you contact that broker, you say, I want to set up an account in that brokerage in your name of your SMSF. They'll ask you to send in bits of paperwork. You set up the account. Then through that account, you can just go click, click, click. I want to buy Tesla shares, click. And then you pay for it out of your SMSF bank account. So no, there's no special paperwork that you need to get from the accountant at all. It's just set it up with a proper brokerage firm online, really easy to do. Send in the paperwork, make sure the account's in the name of the SMSF. Even if you have one in your personal name, so you might be buying shares in your personal name, you need to set up a separate, and it can be potentially under the same account umbrella, but there are two separate parts with different names. Set it up and then go shopping and pay for it out of the SMSF bank account. So sorry we didn't get back to you quicker on that one. Regarding the other question about Macquarie stopping transactions for crypto payments, yeah, that's still the case, unfortunately. There is an article I linked to on our website about that. What a lot of our clients who just are not big crypto players, like if someone's only really investing in crypto, then they may only set up a bank account, SMSF bank account with a bank that's not Macquarie, that's a crypto-friendly bank. But a lot of our clients have, 5-10% of their investments in crypto. And sorry, whoever just joined, would you mind just muting yourself? And sorry, there's someone who's not muted. Sorry, there's a lot of feedback going on here. Carrie, I think it is. There we go on YouTube. What we suggest is if you're setting up an SMSF, we'll just set you up a Macquarie bank account. The reason is that it's much easier for you. You don't have to deal with all the paperwork and the processing, and it's quicker for us to do the rollover, and it's quicker for the accounting as well because the Macquarie bank feed comes into the accounting system. And then when we're rolling out the app in the next sort of 18 months, it'll be all live feed. So if people have just got, say, 5 to 10% or 1% in the crypto, what we suggest is you can set up a crypto-friendly bank account in the name of your SMSF. You just, again, type it in, crypto-friendly bank account Australia, select one that you prefer. You can have two bank accounts for your SMSF. So the main bank account, which is linked into the accounting system and into the app that we'll be rolling out in due course, 18 months, 2 years, that will be updated live. Then whatever your crypto budget is, you just transfer that in one big hit across to your crypto-friendly bank account, and you can do the payments through that. And that means that your live feed will always be sort of more or less up to date. What you mustn't do is transfer any super money into your personal bank account and pay for anything from your personal bank account. So that's answering that question.
Yep. Helena said it's just weird. Their budget feels like there's going to be a real smackdown out of the blue. Something else is coming. They're hiding. Yeah, I think a lot of us feel that. And that's probably why I fell asleep watching it as well, because it's just like it's so pointless. Like all this stuff is just more stuff they're throwing at us. They're just throwing everything they can at us until we all give up. I don't know. But yeah, there's more coming, as we know. It just looked like a joke. I don't know if people were watching Chalmers or whatever his name is on the question and answers with the media afterwards, and he's smirking like a Cheshire cat. That's about when I just went, I can't do this. Like they're smirking at the fact that don't get me started. All right. Kristen has said, theoretically, you would almost roll your entire life savings into a fully franked dividend-paying ASX-listed company and hope the market doesn't drop. I would not do that. I would not do that if my life depended upon it. So I used to be a financial planner, so I used to help clients invest in the share market. I don't do that anymore. So after COVID, I actually resigned and quit my license as being a financial planner so that I could say say my truth in these matters. But I believe the share market will have a massive drop. If I've got heaps of videos there on this topic. You know, they're predicting a 50 to 80% drop on the share market at some stage. And I would not ever want too much money or any money in the share market. Because the other thing is that this is all part of it as well. The share market is a digital asset. So once you're in that, then they roll out the digital ID, they do whatever they want to do. You know, you have completely lost control of your entire life savings. So I wouldn't be doing that. M&K have asked, was there anything in the budget to indicate extra expenses for SMSF to try and discourage setting one up? No, absolutely not. I've spoken on SMSF for a very long time. So I've actually been doing SMSF since 1999. So I know because my son was born in 1999 that's 27 years ago. It's a long time. Makes me feel really old. But leaving that aside, they have always been pro SMSF because they want Australians to provide for their own retirement because they don't want to provide for your retirement. They know, when we say they, the government know that they do not have enough money for the age pension for all of us. And even who would want to live on the age pension anyway? It's basically borderline poverty. So they encourage superannuation and they encourage SMSF. And that is why for people who do set up an SMSF, it's really good to do it with a really good company that really know what they're doing, because the rules of the SMSFs are very, very strict, very strict. If you do anything wrong, there's penalties, they come down on you, the audit is difficult. That's all difficult. We as a firm, we help you through all of that. As long as you follow our instruction and do what we ask you to do, you know what Mary Jane was just saying about don't use your personal bank account, blah, blah, blah. As long as you do the things that we ask you to do, you'll be fine. But the reason the rules are so strict in an SMSF is because the government want you to provide for your own super. But they do want to make sure that you're doing it in a way that abides by the rules and you're not taking the money out sooner and you're putting it all aside for your future, etc., etc., etc. So no, they still encourage it. Pam has asked, if you purchase the asset 5 years ago under the old rules and you sell it 5 years later under the new rules, yeah, you'll only pay tax under the old rules at this stage. We haven't seen the detail. But that's the way they've announced it, is that it's grandfathered. The old rules will apply to all existing assets held at this particular date, or according to what I've just seen, any assets bought before 1st of July 2027. So yeah, don't sell assets just because of these new rules. If anything, it will encourage people to hold on to the assets that are under the old rules. Because you're better off holding those assets that are under the old rules than selling them and buying a new asset that's under the new rules.
So actually, I've got a question. So potentially, if there is a year, and if, you know, is it time, would it be, do you expect a rush on people investing in things to take advantage of the existing?
Yeah, that's what I just said earlier, but we want to see the detail first to clarify that. But once we've seen the detail, we can definitely put some information out about that, because, you know, people who are thinking about buying bullion or crypto or whatever you're buying, yeah, it might be that you should do it before 1st of July 2027. Marianne has asked, again, you've got 2 accounts linked to the SMSF. Which one do you contribute in pension mode? It doesn't matter. The accountants do that little accounting. That's what accountants do. We account for things. We'll allocate it in to pension mode or not when it hits the account. So your new contributions go into the accumulation account, but that is just an account in the background. It's not a bank account. It's an accounting thing.
Yeah, this is one thing I always help our clients understand when they come. There's the word account. So there's a bank account, and normally there's just typically 1 or maybe 2 bank accounts, but typically 1 bank account, all the SMSF members' money go into that one bank account. But in the back end accounting systems, we have different member accounts. So it's unfortunate there's only one word, account. So you've got the bank account, but then you've got the accounting accounts.
Yep. And Jane has commented, okay, so what you're hearing is we got royally pucked last night. Yes. That's pretty much what I said on my Facebook video. Yes, we did. We did. We probably did. Yeah. And I don't know, there's nothing we can do about it, as I said, except when enough Australians stand up en masse and just say that this isn't on, you know, how can they continue to tax us? They're just taxing us into the absolute ground. And I, you know, philosophically, I've looked at it like this. If you were going to live in a community and that community said to you, well, if you pay $100 a week, or maybe even $500 a week, and we will look after the roads and the bushes and the landscaping and the garbage and the septic and the hospital. You know, if you get sick, we'll look after you. You know, we'll do everything for that $500 a week. We will look after the whole area. You know, you probably go, yeah, actually, that's really good. I don't have to do any of that. That's fine. I'm happy to pay the $500 a week. But they're telling you what they're going to spend the money on, and you agree with what they're going to spend the money on. I think if the government spent the taxes they raised from us in a way that we agree with, in a way, I mean, we all know that we want hospitals. We all know we want police. Well, some police. We all know we want government as in security and somebody making sure we've got enough petrol coming into the country. We do want a government. We just don't want them to completely tax us to death and then spend all that money on things that we do not want it spent on, like Ukraine, on marketing for new vaccines, on whatever they want. That's my bugbear against all of this. I've actually read the government budget. I think it was the one after COVID. I read it, a 200-page report of numbers. I read it all. And I was so frustrated because as an accountant, you know, the number one rule, if anyone knows anything about accounting, is for every debit, there's a credit. That means for every bit of income, there's an expense. And the two are meant to equal. So all the income gets added up, and then what you spend on it gets added up, and then there's a balance. That's accounting 101. In the budget papers that I read, it had all the pages and pages and pages. And then on crucial bits like money to Ukraine, money spent on the COVID vaccine marketing, they have a line, NFP, not for public release. So in other words, the budget is a load of crap. Load of crap. We do not know what they're spending on things. And that is why more and more people, myself included, is getting so frustrated with the Australian tax system. They're taking it off us in every which way they can, and they're not even telling us what they're spending it on, let alone getting a vote. Shouldn't it be a vote? We want to donate $1 trillion to Ukraine. Australian people, do you want that? Yes or no? But no, they just make up their own mind and they do their own decisions. And yeah, sorry, Mary Jane.
No, sorry, but one of the reasons that they, you know, have given themselves more and more license to do that, including making more government jobs for the boys and girls, is that everyday Australians have been lulled into this sense of, oh, it's too hard for us to understand. We could, well, you know, it's beyond our pay grade. We can't do it. We will just give up our power. And so I just want to say thanks to everyone. There's 46 or 44 people, if you take Cass and I out of it, on this today. That is by far the biggest number of people we've ever had. And that's actually a testament to the fact that more and more everyday Australians are deciding, okay, I need to pay attention to this stuff. I need to educate myself. A lot of the clients I speak to sort of at the beginning say, oh, you know, I hear the word overwhelm a lot. Please don't use that word. It's like, you don't need to use it. You just go, I'm going to take one little step, and I've taken a step and I've joined this today, and Cass has said a few things and I kind of understand a few things. That is fantastic. And you take one little step, and that's really what our company is set up to do. I mean, yes, we charge fee for services for certain sort of superannuation accounting products, services. But the reason we do this and continue to do it is the educational, the empowerment of everyday Australians. And so thank you to everybody who's joined today. It really makes me feel really delighted that it seems that we're in the right trajectory. More and more Australians are finally getting to the point where it's like, hang on, no, I need to pay attention. I need to take charge and do something. Even if it's just you start with your own little budget. Start with your own little budget. Yeah. And you can do it. And we're here to help. That's why we do these free group Q&As. Today's a bit special. It's focused on the budget, but every couple of weeks we'll do one. And if you've got any questions, just jump on and you can flick them to us.
Yeah, absolutely. I'll second that, Mary Jane. Mary Jane, because we've got new people on here, we'll probably just do a little bit of background that Mary Jane and I actually met at the Canberra Freedom Rallies. And we were highly involved in organising those rallies back in the day. The first one we had about 10 people, then it grew to 50. Then we had one where 1,000 turned up, and then, of course, the big convoy to Canberra. So, we were heavily involved in all of that. But it came a point in time where we realised that we're just not getting anywhere. Like, rallies are exhausting and expensive. Like, Freedom Financial Solutions has put a lot of money into rallies, but we're not getting anywhere. They just ignore us. They just ignore us. So Mary Jane and I, while we were shooting, I believe, we were learning to shoot some guns out in a property.
Oh my God, they'll come for us. Legally, we're all licensed. It's fine.
Yeah, we're licensed. We are licensed. We sort of had a chat about, well, what more can we do? And at the time, I had mentioned SMSF on one of the stages and people buying gold and silver and getting your money out of the system. I'd actually retired. I didn't want to do this anymore. But I had so many people come to me and say, can you help me do it? That I went, okay. So that's where Freedom Financial Solutions got set up, is I went, okay, we better set up another firm. We better start setting up SMSFs. And then I said to Mary Jane, I'm so overwhelmed. I can't, hundreds of clients, I can't cope. And Mary Jane said, I can come and help. I wouldn't mind a little bit of part-time work on the side. And I think she's been doing 80-hour weeks ever since. So, that's where we started. And, we will continue whatever we feel. Whatever we feel, however we feel we're adding and helping, we will continue doing what we're doing. Just in the last few minutes, in addition to what we already do, we have launched a charity. Mary Jane might want to pull up the website. Future Solutions Foundation. So it is, as the name suggests, looking for future solutions. In terms of, we had to set it up with an approved charity. So we are the key behind us is helping those that are medically injured, so medical negligence in terms of legal assistance, financial support and guidance, alternative medical, counselling and spiritual education and empowerment. And we have our honorary patron, Barbara O'Neill. We are launching in Sydney in June. So that is really exciting.
July 9th.
If anyone wants July the 9th. So if anyone wants to know more about that, the website's up and running. We can't be overwhelmed with requests for help yet because we don't have any money. But hopefully over time we will get donations and build this charity up into something successful that we can then use to help others. So, and also, with Freedom Financial Solutions, ever since the beginning, we have said that we donate our profits to charity. It became harder and harder to find a good charity to donate to, particularly in the freedom movement. So we set up our own. So it saves us getting taxed. We can manage to put all our profits over there and use them to help others. So, and have a look at the website. We've got some really good people on the panel, really good credentials. So we are really excited about what's going to happen for this charity.
And we're launched on the 9th of July in Brisbane. Barbara O'Neill, our honorary patron, will be there. Unfortunately, we sold out in less than a week, so there are no tickets available, unfortunately. And we actually have, we sold 350 tickets, and we've got another 350 people on the waiting list. But that doesn't mean you shouldn't put yourself on the waiting list, because that means you will get early notification for the next event that we will hold. I'm keeping my fingers crossed that we'll get another date from Barbara O'Neill either later this year or definitely next year. So now, knowing how popular she is, we'll look for a bigger venue next time. This time it's just 500 people. 400 people. So, yeah, you can just go onto this futuresolutionsfoundation.org.au, buy tickets here. It takes you through to that. Get tickets. The tickets aren't available, but you can join the wait list there.
Excellent. Carrie has just posted for us. Thank you, Kay. But yeah, it seems that assets bought after budget night will be stuck with this new tax regime. So I'm just reading here. It's grandfathered for existing property. You can continue to negatively gear those until they're sold, but for established properties bought after the budget, you can only use the negative gearing up until 2026, and then you won't get it. So
the 30th of June this year. So you've got 6 weeks.
Yeah, but don't rush out and buy a property, because no, as a budget night, you're stuffed. Not sure yet about the capital gains tax, what that cutoff's going to be. What's the best approach if you want to move overseas but you've got physical bullion? Just take it with you. There's nothing wrong with taking bullion overseas. You just double check the country you're going to and its entry laws. You have to declare it if it's over $10,000. But I have travelled with significant sums of bullion, and it's absolutely fine.
And be careful on which country. Absolutely check that, because, for example, I've got a strong connection with South Korea. My husband's Korean, and I took over quite a significant amount of money there some 20-something years ago. We were going to buy an apartment, which we ended up not doing. So I took over $100,000. But when we didn't buy it and I wanted to take it back, the interest rates had changed. So I actually made $10,000. You can't, plan these things. But the Korean government would not let me take that extra money out of the country. So I could take only the amount that I'd taken in. Now, that's obviously South Korea is pretty special, but I'm sure there are a lot of countries with their own special rules.
Yeah. Another way of doing it rather than physically taking it with you would be, for example, with Ainsley Bullion, you can have what we call the allocated and unallocated accounts. So you could physically have your bullion, take it to Ainsley. They put it in their unallocated account, which just means you've got a large amount of money sitting with them. And then once you're overseas, they would then be able to, I'm sure that they would be able to work out how to transfer the money to you overseas. Maybe, but they should be able to.
Yeah. And just in case anyone wants to preemptively ask if Ainsley has any bullion contacts or referral partners overseas, the last time I asked them, which to be fair was a few years ago, they didn't. Because we did have some people asking, well, if I put my bullion in here with Ainsley, can I pick it up from a referral partner overseas, which I thought was actually a very sensible solution, but they said they didn't have any at that time. So
there is also some, I believe in Singapore, some bullion dealers that are reputable. I've got clients using them. So you could actually buy the gold in Singapore and pick it up from there. So yeah, there's ways around everything. So is gold and silver still trending up? That's a good comment for our last minute. Actually, I'll answer the first one. What are your thoughts on using financial advisors? I noticed you have one linked on your website. I was a financial advisor for 20 years. I absolutely quit. I believe FP stands for flogging product, because basically all they do is sell you stuff, managed funds, share portfolios, and insurances. And the reason we have one on our website is for the insurances, because in superannuation, a lot of people have got life insurance and other insurances, and when they set up SMSF, they want the insurances in the SMSF. So we needed a financial advisor to do that for us.
And actually on that, I'll just ask Natalie, is it? I didn't think we specifically say we have a financial planner on our website. In terms of a service that we provide, it might be just listed under her individual name. In fact, I don't. So if you are looking at something in particular, could you email me directly with the link? Because I want to make sure that, we don't put the wrong information out there.
So just regarding gold and silver trending up, I did see that silver was up 7% this week. So it is trending back up again. Silver's back up to $1.20. now. I'm just having a look. So, or $1.1949. So it is trending up again. It is up and down. Who knows where it's going to go, but it's certainly still up a lot since we started all of this. Jane has said she bought bullion and Bitcoin, especially the Bitcoin. It's halved in value. Yeah, absolutely. That's not. I've never recommended crypto. I've always said put into crypto what you can afford to lose. Like personally, I've got maybe about 5% of my net wealth in crypto. It's what you can afford to lose. You can sleep at night. If it disappears to nothing, you're okay with it. But anyway, right, that's a good time to stop. We're 1 minute overdue. So thank you, everybody. If you're not already on our newsletter, please do so on our website. Sign up for our newsletter because that way you will get notified when the Q&As are on.
Thank you, everybody. And I'll set a date in the next day or so for the next one and hope to see you then. Thanks. Bye.
See ya. Bye.